You think you live in a tax hell? You want to leave the tax inferno, but you're afraid that you might just leave one to enter another? Stay tuned, because I'm going to do a rundown of what a tax hell is, what exactly constitutes a tax hell, how to understand it, and how to avoid them. Hi everyone, my name is Javier. I'm a research and development associate here at Nomad Capitalist, and I'm the tax guy. My job is to look at different jurisdictions around the world and determine how tax-friendly they can be, and I do this from two perspectives. So number one, we look at the jurisdiction overall. So obviously when we're talking about a tax hell, we look at the official objective policy. So there's an objective criteria. Is a country more aggressive or is a country less aggressive when it comes to taxing individuals and corporations? But there is also a very high individual, subjective component. And I mean subjective in the actual basic meaning of the term, i.e. relative to the subject, not the object. What I mean by this is that certain countries that might be tax hells for certain people might not be tax hells for other people. It really depends on how you earn your income, if you are under a special tax regime or not, and that is very important to understand, because oftentimes I talk about countries that are tax-friendly for certain people, and when especially locals who are working a 9-to-5 job in that country hear me talking and they say, Javier, aren't you supposed to be like a tax geek? Aren't you the tax terminator? How in hell can you say Panama or Venezuela or Switzerland can be tax-friendly? Are you crazy? We're paying insane amounts of taxes. And then I have to reply to them and say, well, you know, the reason that you're paying insanely high amounts of taxes is because of the type of income you have or because of the immigration status that you have. So let's do a rundown. So basically, what do we look for when we determine that a place is a tax hell or not? So number one objective criteria is what kind of taxation system are we talking about? So that's pretty straightforward. Are we talking about a tax haven like the Cayman Islands or the Bahamas potentially that just do not levy any type of taxation on their residents? Or are we talking about a system like the United States that has a worldwide taxation system on its citizens and its permanent residents, regardless of where they live? So one extreme of the spectrum to the other extreme of the spectrum. So in the middle, you have a lot of different stages and phases. So you've got territorial tax countries. You've got worldwide tax systems with a residence requirement component. You've got non-domicile tax regimes. You've got, as we've recently learned, you even have a system whereby you can be domiciled but not resident, which is the opposite of the non-dom, and we'll be making some videos about that in the future, which is quite interesting to explore. You have worldwide taxation systems with specific exemptions, like, for example, the case of Switzerland. You've got semi-territorial tax systems where some of your foreign income might be taxed, but not all of it. You know, in the case of Switzerland, not only certain exemptions, but you have so many of them to the point where you could even consider countries like Switzerland a semi-worldwide taxation system, right? So you have a lot of nuance in that spectrum. And so depending on where you are in that spectrum and depending on the type of income that you have, an unexpected country, an unexpected jurisdiction might be a tax haven or a tax hell for you. So for example, if you take a look at the tax hell report that comes out and you take a look at the top picks they have for the worst possible countries where you could be a tax resident of, they talk about Venezuela as I believe being number 2, where I'm from. And it's funny because many people tell me, well, how can you still live there if the taxes are so high? Corporate income taxes go up to 34%. Individual income tax rates are also at 34%. You have a VAT that is considerable. And my answer to most people is, yes, that all is correct. But at the same time, it's a country that doesn't have CFC rules. It's a country that will allow you to set up offshore structures to hold foreign passive income. So if you have investment income offshore in the US and Switzerland and Singapore, if you structure your affairs correctly, you could potentially defer taxation. If you run an active business overseas, it's even easier because there are certain rules whereby certain passive income might generate some inclusions in Venezuela, but active income is 100% okay. You have a strong network of tax treaties that helps you obtain a lot of relief, and you can play with pass-through entities that are recognized in certain countries but not by Venezuela, and you can structure yourself in such a way that you have the right structure to do things legally but to optimize your taxes in Venezuela. And the same thing happens with a lot of other countries. So for example, the report also cites Argentina as being an example of this. So Argentina is similar. Argentina, if you do something very local, just as in the case of Venezuela, if you have a restaurant or a 9-to-5 job in Buenos Aires or Caracas, sure, your taxes might be pretty high and they might be pretty terrible. But if you have foreign income structured within offshore entities in the right way, in both countries, you might be able to, especially for active income, you might be able to defer that taxation indefinitely. Many people in Venezuela, the deemed dividend rules are also a big advantage. The fact that deemed dividend rules are not as aggressive, meaning that you can more easily borrow money from your own company under the right circumstances and avoid a taxable event that way. Right? So this is a very clear example of this. Another one I always love to talk about is Switzerland, that I've already mentioned a couple of times in this video. So Switzerland, if you're a person, in a 9-to-5 job in Switzerland, serving coffee, your taxes are far from being low. They're I guess lower than other European countries, but they're not low. But if you're somebody who derives a lot of their income from foreign rental properties, for example, then you're tax-free in Switzerland. So you can live in Switzerland and live off your global real estate portfolio, and all of the rental income you perceive is 100% tax-free, which means that Switzerland, for a real estate Mongol operating at a global scale, is a tax haven, essentially. No different than the Cayman Islands would be or the Bahamas would be. That is very interesting to take into consideration. The same thing with capital gains. If you are a person who lives in Switzerland and you're trading stocks or you're trading bonds or you're trading crypto, unless you qualify as a professional trader, and most people don't, you do not have to worry about taxes on capital gains. So again, if your income mainly derives from capital gains, there is no difference from a tax perspective from living in Switzerland than living in the Cayman Islands or the United Arab Emirates. So think about that. Many people don't visualize that as clearly as they should, that a place like Zurich, Switzerland, or Geneva, Switzerland can be as tax-friendly as Dubai or Grand Cayman, provided that you have the right type of income. Another example of that is that Switzerland does not tax foreign permanent establishments, meaning that if you are a lawyer or a doctor, an accountant or an engineer, and you have a permanent place of business outside of Switzerland, and you travel back and forth, but you have that permanent place of business operations, you're able to exclude that income derived from that foreign place of business operations from your Swiss tax bill. So again, if you're a global business person, Switzerland could be as friendly from a tax perspective as maybe the Cayman Islands. Now, maybe when I say as friendly, it could be a bit over the top in the sense where you do have to follow some stricter rules in Switzerland. There are some reporting requirements that you have to follow. It's not as straightforward as not having to report anything like on SARC or the Cayman Islands, for example. But the ultimate result is the same, which is that you are achieving a very, very high level of tax efficiency in a place where maybe most people are not achieving that very high level of tax optimization. In addition to that, you also have some very controversial examples, like, for example, the United States. I love talking about how for non-resident aliens, the U.S. is actually a relatively friendly place in terms of taxes. Now, obviously, you do have to keep your eye on the ball. In the case of the U.S., it's a substantial presence test. You can't spend more than 120 days per year on average. So substantial presence test is, the U.S. counts the full days that you were in the U.S. in the current year, 1/3 of the days you were in the U.S. the previous year, and 1/6 of the days you were in the U.S. the year before that. So 2 years before the current year. And if the sum of all those days, if the result of that calculation is 183 days or more, then essentially you are a U.S. tax resident, and you will have the same reporting requirements as a U.S. citizen or as a green card holder, as well as worldwide taxation. Now, there are certain treaties that might help you get around this, but globally it's that. And in addition to this count, you also have to be present in the U.S. in the current year for 31 days or more. So globally speaking, what does this mean? This means that you can essentially just keep a day's count. You can have as many ties to the US as you want and avoid tax residence. And so if you invest in the US, for example, in stocks, you can get tax-free capital gains on the US side as a non-resident alien. You can have US companies and potentially not pay any tax depending on how you structure them. So the point is that even the countries that we associate with the most aggressive tax systems, with the most invasive reporting requirements, for the right kind of person might be extremely beneficial from a tax perspective. And that's what we're all about here at Nomad Capitalist. We're all about talking to you, getting into the nitty-gritty details, going into your specific situation, understanding how you make your money, what type of business you're running, and based on that, recommend the ideal jurisdiction by combining not only the tax elements, but by combining also elements that have to do with weather, with social values, religious beliefs, and a set of criteria that we set out during our plan creation process. Another great example of a country that, again, might not be tax-friendly for everyone, but is tax-friendly for the right kind of person is a place, for example, like Panama. So if you go to Panama and you run the right kind of business, you will be tax-free, even though the people in the office next door will not. So Panama has this very interesting thing where, unlike other territorial tax countries, you can perform some work in Panama, but provided, for example, if you are, let's say, a service provider, you're a lawyer, doctor, accountant, engineer, whatever it is, and you're providing a service to a foreign client, and the economic benefit of that service is being realized outside of Panama, then you can still classify that income in Panama as foreign source and therefore not taxable in Panama, even though the work was performed from Panamanian soil, which is kind of like a big exception to the territoriality rule, because in most cases, any work performed on the soil of a territorial tax country will be considered sourced in that country. What I want to, again, showcase here is that, again, if you run the right kind of business with the right kind of clients and the right kind of, let's say, structure, then your income will be tax-free in a country where most people are not operating on a tax-free basis. There are always options. Tax hell or a tax haven might be very subjective given your individual circumstances. So the important thing is you work with the right professionals, you work with the right team that can guide you to the right tax haven for you, and that can steer you clear and steer you away of the tax hells for your individual circumstances. So if you want to learn more about the tax situations of countries around the world and you want to understand better what exactly is the ideal jurisdiction for you based on your specific business, on your specific family size, on your specific financial situation, then be sure to visit us at nomadcapitalist.com/apply, subscribe to this YouTube channel, follow us on Instagram, and I will see you in the next video.